Hello and welcome to this special CNBC Africa broadcast of Nigeria's Monetary Policy Committee meeting. I am Wole Famirewa and thank you for joining us. Shortly, Nigeria's Central Bank Governor Godwin Emefiele will outline the position of Nigeria's Monetary Policy Committee in its first meeting of the year. Meanwhile, oil prices are up over 10% this year, but a sharp decline in prices was seen on Monday, driven by the possibility of quicker than expected interest rate hikes by the United States Federal Reserve. And also the general consensus among analysts is that we have spoken to is that the Monetary Policy Committee will maintain the status quo and keep its monetary policy rate at 11.5%. To preview and review the announcements, my guests are Bismarck Rewane, the CEO of Financial Derivatives and a member of the Presidential Economic Advisory Council. We also have Kola Karim, the chairman of Shoreline Group, and Tilewa Adebajo, the CEO of CFG Advisory. Gentlemen, it's a pleasure to have you join us for this show, and Happy New Year to you all. I'd like to start with you, Bismarck. It's the first meeting of the year. I do know that your view is that there is a chance that we could see a hike, but I think you are towing the line of most analysts that suggests that they would maintain the status quo. But can you just give us the context that you think the MPC will be considering as it makes that decision today?
First and foremost, they'll be considering the fact that exogenous variables are becoming more important than domestic variables. In other words, since the global economies are all facing the same trajectory of higher inflation, since there's a possibility that there'll be a hike in interest rates, and therefore, there's also a possibility that oil prices will drop after the Iran deal, even though they're above 80, but they could come down sharply. There'll be caution. There'll be a lot of caution. Therefore, if higher inflation has gone up after 8 consecutive months of official inflation declining, and now is this the beginning of a trajectory of increased inflation? And how do you deal with it in an environment where global environment is all for inflation? So, are you going to be running against the trend at a time like this? So those are the things we think that one, there will be no change this time, but definitely by March, a change becomes almost inevitable to protect the Naira and also to ensure that inflation doesn't scuttle things.
Let's leave the Naira and the exchange rate aside for a moment, but let's talk about that surprise move to the upside for inflation. Can you just speak to how concerning you think that is for the monetary policy authorities right now?
Well, I think first and foremost, it's official inflation that has actually shown, there's evidence that official inflation has increased. But more importantly, is the fact that core inflation, food inflation, and urban and rural all inflation factors indices increased at the same time. And it's increased at a time of harvest. So if you have the time when seasonality should kick in and give us ample supply, we now begin to see food inflation increase. Then added to that is a structural inflation that comes from logistics, moving products around the country. Then there's also, beneath all of that, there's what we call high-powered money, the transmission effect of high-powered money in the economy. That is showing signs of growth. Increased velocity of circulation because of the number of transactions that are taking place. All of this point to the fact that I do not think that it's possible to see inflation decline in the next 2 months. Where do we see it getting? We see it getting to as high as 16.5. At the same time, we've seen interest rates, both in the UMO, primary market, all of them down. So when you have a situation where inflation is increasing and interest rates are actually declining and artificially low, there increase distortions which become difficult to manage, especially as you're going into an election season.
Right. Tilewa, if I can come to you, and I would like you to touch those external factors. We all know that there's that expectation, and in fact, some are suggesting it may happen sooner than expected, that the Fed will begin to raise rates this year. Your perspective on how those external factors could impact the MPC's decision-making this year?
Good afternoon. Thank you very much. The way I see things with the external factors, I think what is under threat most is our foreign borrowings. The Nigerian government has been very active on the Eurobond markets, and I think that is where the immediate impacts you'll see with the hike in the interest rates with the Fed reserves. because the Eurobond rates will adjust, and I think those rates will go up. And I think for investors, it will be good because the yield on those bonds, I think, will increase. So I think what will happen is that we'll be paying more for those Eurobond loans. I think that's the direct impact I see with those shocks. On how the rest of the external or the global economy is going to impact Nigeria, I think we have seen that in some cases there's been defiance because we're seeing flows for startups close to $1.5 billion last year, and we don't see a slowdown on that. So in fact, we're projecting about $2 billion worth of inflows for startups in Nigeria for this year. So there's a positive impact on that side. On the domestic market, however, I think we have not really been able to manage inflation. And I think the key cause of managing inflation has to do with the way the government debt is being managed. So I think the government debt is becoming unsustainable. And financing that debt, I think, is what is keeping up the pressure on inflation in Nigeria today. That is really what we really need to watch. As we've said, some of that, we have 6 trillion naira worth of debt we need to finance this year. Some of it is going to be, half of that is going to come from abroad, which will be in dollars, and we're expecting higher interest rates. So really the challenge for inflation in Nigeria is the unsustainable level of government borrowing.
All right, let's go now to Kola Karim. And it's great to have you on the first MPC of the year, because you're in an industry that obviously impacts Nigeria's economy significantly, and that is the oil and gas space. Now, unfortunately, as we have seen recently, the oil price has moved up, but Nigeria's production sadly has not even hit the OPEC quota. How significant do you think that could be for the monetary authorities in terms of how they manage the exchange rate?
Thank you, Wale, and Happy New Year to you. Thanks for inviting me. It's a very critical issue because the problem with Nigeria is because 89 to 90% of our foreign exchange earnings is based on oil exports. And if you see what is happening, oil prices are going up, but Nigeria's production is actually not meeting OPEC quota. And that is a fundamental problem because there's a nexus between high oil prices and the increase in illegal theft of oil in Nigeria. And we've seen a spike and increase in that. So production is not going anywhere. And this is a big problem in itself that needs to be fixed fast if we're going to make any impact in increasing our foreign exchange earnings into the coffers and trying to help alleviate quite a number of these issues on the financial front.
And just to the point that you're making about oil theft and vandalism, I did note here that 8 oil terminals, including the famous Forcados and Bonny terminals, were shut at different points between August and October last year. I imagine most of them are still shut. Can you speak to how significant this is in context of how we can fix this issue? Because you mentioned an interesting point that it seems there's a correlation between high oil prices and more oil theft in Nigeria.
Look, the true position is this. If you see the terminals that were shut due to force majeure declared last year, they were for several reasons. Some is for vandalism, some is for old age of the physical assets itself. Some of this infrastructure, like Trans-Forcados pipeline, was commissioned in 1970. That's a pipeline that's over 50 years old. In other climes, we will have built additional pipelines that would elevate the pressure on this old pipeline. So we have old infrastructure, and we're trying to increase production within this old infrastructure. Something's got to give. And that's one problem, that we're having breakages in the pipeline. Then the other is the man-made breakages, which is the theft and the vandalism to the pipelines in itself. And there's only so much you could patch a 50-year-old pipeline. If it's vandalized once, we patch it. They do it again, we patch it. Then it becomes a recurring problem, and the wear and tear on the actual infrastructure becomes a position that's not sustainable. So these are all tied in to an issue that is critical to the industry, that's the lifeblood of the foreign exchange earning position of the country, and it's something that government needs to take a very, very stern look at in making a fundamental decision on what needs to be done to safeguard the natural resources that have been produced from Nigeria.
Bismarck, as I come back to you, I think Kola is hitting a very important point that I think many would suggest we see less of in a pre-election year, and that is the tough decisions that need to be made to get the economy going in the right direction. One change that many have been quite vocal about is the issue about the subsidies, the subsidies on petroleum products. And as you must know, the finance minister recently spoke of the government going back on plans to eliminate those subsidies. Can you speak to how all these dynamics are influencing the economy this year?
Okay, the thing about subsidies, what we are facing today is the conflict between the legacy mode of thinking and the, what I call the practical mode of dealing with issues. But definitely there's been some ideological backsliding. And when there's ideological backsliding, what you have done is to empower the enlightened self-interest. And it makes it almost very difficult to do it in future, but you will have to do it sooner or later. The best time to do these things, either in the final days of an administration where they are not seeking re-election, or the early days of an administration. We've missed the early days. The final days, I do not think, from what I've seen and what is happening across Africa, it becomes politically dangerous to embark on reform, aggressive reform at this time. In any case, what you can then do is to ensure that you try and protect the leakages, which is difficult, just like what Kola was saying about bunkering. So once the enlightened self-interest dig in and get entrenched, what you have essentially is that you have a criminal enterprise and a value chain whose returns compared to the number of people who benefit from it is so high that all the good guys are unable to organize themselves to stop it. So for now, it's sad that we have had to defer this, and it becomes difficult. So it depends on what the next administration will do, or maybe towards the tail end of this administration, maybe we may muster the courage to do it, but that subsidies have to be removed is inevitable.
Right.
At what time, we don't know. In what order and sequence, we don't know. So for now, it becomes what we call work in progress.
All right, let me go to Tilewa, and it's interesting that we are speaking so much about what many will consider fiscal issues, even though we are analyzing the Monetary Policy Committee's decision. But that is the reality of Nigeria right now. There is just that sense that so much pressure has been put on the central bank and the monetary authorities to drive the economy that not enough is being done by the fiscal authorities to make these take these much needed decisions to move the economy forward. So on that point he made about the entrenchment of interests, the Nigerian situation, I want you to reflect on that.
Well, like we've seen, like we've said, monetary policy has reached its limit. I think we all have to agree on that. And the whole essence for monetary policy is to grow the economy. Debt service is the number 2 line item on the budget. It's only defense that is higher than debt service. And with the interest rates going up, with the Fed increase, that amount is going to go further up. So clearly, like you said, fiscal policy is overwhelming and overreaching into monetary policy. So the central bank is struggling. So it's now clear that we need to have a way to have a fiscal restructuring. And what Bismarck has said, if they had even begun to take the subsidy off maybe 10% every year for the last 5-6 years, we wouldn't have this problem. But again, another window has been missed. So it's going to the next administration. So until we resolve that fiscal problem, it's going to be difficult for us to see some substantial growth in the economy. And the overall impact is that the growth of this economy is lower than population growth. And if our population is growing at 3% per annum and our economy is projected to go at 2.5%, then we have a problem. And of course, 100 million people in poverty. So those are the issues that we need to address. And so the best that monetary policy can do is just to offer financial stability and economic stability so that things don't get worse. So that is the dilemma we find ourselves. And that will be the challenges of the decision that has to be made today.
Right. Okay, Kola, as I come back to you, and again, we still have to come back to this oil markets because of the influence it has on the currency markets. There's also been concerns about the speed of investments that have, or should I say lack of it really, in terms of investment into the oil and gas space following the passage of the Petroleum Industry Act. Do you see things changing anytime soon? And if not, what do you think are the critical factors that need to be addressed?
Wale, you see, there's a big problem that Nigeria needs to follow global trends. One, decarbonization is now a world order, and that's the talk of everywhere. And that in itself is giving global financial institutions the watchword in how much money they can or they will lend to oil and gas projects or businesses. That in itself is a major problem because this is an industry that requires non-stop investment to keep proving more reserves because of the traditional natural decline of 4 to 5% every year. And if you look at, again, another connection to that, the last 2 years with the global pandemic, there's been next to no investment other than run and maintain in the oil and gas sector. So if you couple all this together, an industry that needs money to keep production going, but financial institutions without capacity to lend in that money to that sector, we have and see a problem in front of us. And this needs to be taken into consideration by the MPC. What I'm not seeing is where mechanics have been put in place to shore up the lending support program to the development of the oil and gas sector in Nigeria, because that is the quick win in trying to help and ease the financial situation, be it on the foreign exchange level.